Hey everybody, DayTraderRockStar here, and this is the part one of the HPS watch list video for members. But the part one usually goes out to everyone, which consists of some great education, market radar, and some other tidbits of information. So I was just on the. We just finished up Friday. I'm here after hours, about 5 o'clock. I'm live on the air. So if you get in this video and you find it out there, I broadcast live the markets every single day. From about 8:30 till 4 o'clock, and lots of times we do these overnight, late night shows. I'm trying to get those back running pretty good. But again, for your listening pleasure and for your market coverage every single day from 8:30 till 4, and then the show continues to stay on overnight, so you can always check in to see what the market's up to in the futures and the chart. The chart that you typically see running will be the futures chart, which is right there, right underneath us right now. And we just closed out of Friday, so nothing's going to be happening here until Sunday evening. Sunday evening, 6 o'clock, the futures reopen, and that's when you'll start to see the chart start to move again. And depending on what type of news we have coming out over the weekend will influence how the market starts out. So we'll do a little recap and just kind of let's start off here talking about the markets today. Well, anyway, starting the video back up. I'll be pausing every so often if I have to take a break and stuff, but the video is usually broken down into current market conditions or market radar, what we see going forward based on the patterns and technical analysis. Stocks to watch, and then our main watch list are definitive setups that give you a buy trigger, exit trigger, and a stop, and that's part of the HPS watch list. As a member, you get that. So, and if you're not a member, again, getting this, just come on to Day Trading Radio. You can sign up for a trial. It's a 10-day trial. It's free, no credit card required. Definitely check it out. You get a good feel for everything that's going on here at Day Trading Radio, chat rooms, trading room. The bots and tools that we use, the education, the live stream, the real-time alerts, everything. There's a lot of things going on, a lot of traders, and we work good as a team. So pretty an interesting week. I just want to go into it fast and start off the market radar section. I like to go back and reference this chart here, not this one, but the SPX. That's our cash chart, and the S&P is our benchmark index that we pay attention to. And now, starting on the daily, with this tremendous rally we've been having, on looking at either the daily or weekly, the daily here has been rotating maybe every couple months. If you have a little stair step move back down, May, and then June, and then July we moved down, and then back here in October we got oversold, popped, and then December, and then January. And each one of these oversold levels on the daily do get bought up. I mean, this back here was the Christmas craziness that happened. So we're not going to look too much into that, but we're going to look at this rally that's been happening over the last year. And each rotation has been an opportunity, and it's because of the administration and what's going on underneath, the markets here. And it's just, there's a lot of growth. There's a lot of good stuff for the economy happening, and we're starting to see that in the numbers and stuff, the job numbers and some other indicators. So every so often we will get these pullbacks. When those pullbacks happen, they're usually exactly that, a pullback. It's not the beginning of a big bearish trend here. I just don't see that. I don't think anybody's seeing this as the beginning of something more severe yet. And I would have to agree with that. So we're getting a decent pullback, and look how fast we've moved back on this line. This is a stochastic oscillator right here, and this rotated back down into oversold level after 3 or 4 candles. Sometimes it takes many candles to get from overbought to oversold. This one to 1, 2, 3, 4, 5, 6, 9 candles. This is what we call a fast rotation. The faster the rotation, usually the better the bounce, especially if the stock could actually hold up pretty good. Now, this didn't really hold up that great, and again, this market is really moving on the news, and this event right here the last couple of days has been caused by the interest rate cut and maybe not another cut, and then some commentary coming out of J-Powell, and then yesterday a tweet of additional tariffs, and then a follow-through day today. But we kind of had a reversal, so what sets us up going into next week with a situation which I call dual stochastic buy signal. We use stochastic sometimes in multiple time frames. A 1 minute and 5 minute time frame is good. A 1 minute, 5 minute, 60 minute time frame combined, meaning when all of those are oversold or overbought, it gives you a good setup for a longer term trade. The 60 and daily work great together. So when you have a 60 period getting oversold and a daily getting oversold. Now, as the daily's getting oversold, that 60 is going to rotate faster. It's going to be going up and down and up and down. And then finally, we might be oversold and the daily catches up. Now you have both of these oversold. And when that happens, you tend to have a big reversal. So 60s works fine. But when they both line up, it's more of a rare event, and we tend to get that move. So we actually started to get a oversold 60 this morning, where we started buying some calls down here. And they ended up moving up with the market as the market rallied into the latter part of the day. So we're actually in the money on those. Looking for a follow-through on this. Like to see a follow-through, but we know that not an easy call here. It's more of a gamble because the news flow in this market has been fast and furious. And that is where we stand right now. So that anything could come out over the weekend. But, I do think over time and over the end of this year, we will move higher and take out the highs and take out 3,100. Of course, that would be the next really big level there, a big whole number right there. We got through 3,000, pushed back underneath it. We might break down a little bit further. The other thing I want to talk about here is on the 17th of June. Now, as we moved up here, there was a gap here from the 1st. We just closed today. Paul, RPM, made a great call on that while I was away on vacation. He mentioned the gaps and stuff, and that's what he was looking for. He's trading great, and my condolences. And I know everyone here at Day Trading Radio send out their love and prayers because his dad passed away just a few days ago after a bout with cancer. So if you want to reach out to him, definitely on Facebook or wherever, definitely do that. But he's still a trooper and still trading this market. So we did close that gap. There is a gap back here, a significant gap, 8-point gap between the 17th and 18th that we got down close to. And that brings us to about 28.96 to 28.95 area, give or take 3 points. And if we came down to here and put a reversal candle, I would love that opportunity as a long. We're hovering right above it, and it makes me believe that we don't have to get down there. I've learned in my, my long career in the markets, gaps don't have to always be filled on your time frame. That's the funny thing. The market has no time frame. It doesn't have to wait for your options. It doesn't have to wait for anything. It just has to eventually, we tend to eventually get through there. I don't know if there's any unfilled gaps. There probably is, way back in the day. But a lot of people pay attention to them, so it's something that's very close, and I'd pay attention to if we hit it and look for an area of support there. So that's the potential downside, and then my target to the downside. As we move towards that level, again, we talked about the daily and the 60 time frame being set up, so it's kind of we have a short-term bullish indicator, a longer-term maybe a little bearish, still a little follow-through to the downside, I think, possibly early next week. But we'll see if there's any news that's going to influence that, and then take it step by step. All right, now the video started again. I was just going over the HPS methodology, and when we read the market each day, Villagers out there, I just was so upset because I had such a good roll going here, and we were talking about divergences and what the methodology of HPS is based on, and our 5 indicators, our playbook plays or playbook trades, and each day what I do is call out the markets, identifying these areas which become high probability zones that you want to trade. Now, these little marks on here are described through the day in real time. So we had all these setups, we described them, we talked about them, like I said before. on a wasted segment on the video. I'm not gonna discuss divergences here. You have to actually get to the site, sign up, and just learn it. I mean, this is not a divergence course video. It's an updated video. But these are the levels we want to learn, and this is what you taught each day here at Day Trading Radio. So last divergence there. Then we had the 1, 2, 3 pattern. Go into the description of that, having pivots, or a stock market or a price moves up and down. The directional move leaves that pivot area, and you have 2 pivots. You can make a straight line, and a straight line is geometrical, object, or a line, basically. Shape is a line. That we pay attention to, and we watch it when the price comes up to it again to react and really establishes it. And then we have what we call a 1, 2, 3 pattern. And again, these are all off the, if you go to your dashboard, on the top of your dashboard, you'll see the playbook plays, and you'll see a lot of the videos that describe the setups, the X marks the spot, the 1, 2, 3 pattern, stochastic rotation, 60 daily stochastic bounce, divergences, a lot of cool stuff. And you could also go to schoolofstock.com if you want an in-depth course on how to trade divergences. Go to theschoolofstock.com or theschoolofstock.com. Or is it School of Stock? I don't even know. You'll find it. It's the education. It's cool. Theschoolofstock.com. I'm on it right now. And so look for that divergence course. The divergence course is the one you want to be part of. And that's what we're there. All right, so going to the next thing here. We had this perfect setup, which is called the X marks the spot setup, and we had that capping candle. So we had everything here. We had the channel, which is a pattern, one of the indicators of the HPS 5 indicator system. We have trend lines, support and resistance, moving averages, recognizable patterns, reversal candlesticks. All right. So you have a lot of things going here. You have the trend lines, but you also have a pattern, which is the range between these two. The range between the stock here is an established channel, and that channel is a pattern. So the price comes down to a lower trend line, but it's also a rising trend line. So that makes another HPS signal there, which means X marks the spot where 2 trend lines intersect. And in this case, there was one more added bonus. Someone pointed out today in the chat room, this was an inverted head and shoulders pattern. So this whole chart here is just packed full of information. It's just a great chart. You had a divergence on the left shoulder. You had a head. You had a bounce up to a neckline, which you start to establish that. Then a pullback, and then a divergence on the right shoulder. The divergence is the higher low with a lower low on the price and a reversal candle, and then off to the races, and then a breakout of the neckline. Now the neckline came back into play. It came back into play where the lower trend line came in and where the rising trend line came in. This was a golden egg right here. A lot of people took this trade. We were right on it, and it was a perfect setup. So we popped up really fast and aggressive, and whenever we have an aggressive move up or down, we look for the next one of the next best setups is the bull flag or bear flag setup. And this is, we base this off of our stochastics, believe it or not. It's just not looking at it, but I could read the underlying momentum by understanding 4 sets of stochastics. And really break it down to 2, where we have that pullback after an aggressive move off the 20-period moving average. The price has to stay above the 20-period moving average. And the stochastics has to rotate back down to the 20. Now, I usually call this a 2020 bull flag. And the 2020 represents the 20-period moving average and the 20 line here on the stochastic. So you have the 9 period, which we're using, and then you're really using the 60 period here, which has to be above 80. So here's a typical criteria for a perfect flag is that price holds above 20, fast stochastic rotates to 20. As that rotation happens, this stays above 80, showing the bigger strength, or the bigger pattern here really represents this one, which is the 5-minute time frame. Now it also works good if this is pulling back, this rotates, and this is ramping up. So anytime this is ramping up, especially down here when you have everything set up. X marks the spot plus a possible ramp up. This is like the best setup. So you had that big move up here, then pull back. This is a very key clue, good clue right here. Is the fast rotation oversold and the price only holding going back as far as the 20 period moving average. And then look at the explosion off. And then from that point on, things got a little choppy. But those two setups are just standard HPS day trading radio setups that we want to find. These are the go-to trades. One after, and then these over here, which get alerted to you. And now we have a bot here on our bot channel. You get that right now. And that's been outlining these setups. So we have a bot that's outlining these setups, taking the trades on the buy side and then a short side. And the bot now has the bull flag and soon to have the bear flag. And then we'll be launching its own channel on the bot. So you'll be able to watch that. And do a lot of other things with that bot. So keep an eye out for that. That's getting close to completion. And it's right now, it could be seen in beta on Day Trading Radio on the members dashboard. So if you want to check it out, again, daytradingradio.com. Even to start off with a trial, check out the 10-day trial, and you could sign up, be part of the team. All right, so next up, we talked about some of the coverage we had today and that great setup. We do have a daily and 60 setup. If I were to make a call for next week, I like this setup. I'm definitely more of a bull than bear. And because of that 60-minute rotation, I want to go for an upside push. Someone asked me today, why don't you have that gap underneath us, why don't you take puts into it? I'm just not 100% convinced that that gap is going to be filled. And for some reason, I feel there's more strength to the upside, and I just think this is just another one of those situations. The market gets a little spooked before it gets settled in. And then what if, our commander-in-chief here thinks he's right on the market and says the market's not understanding his technique here. And that scares me alone. I am kind of concerned on the reaction and the weakness. But, is it really? We did get oversold, and it's only been 3 days down, and we're still right next to the highs. I mean, the other day came back from vacation. That's when the market reversed. We had I think that the Fed rate decision on Thursday. It was pushing back up, and then Trump tweeted, and today we had to follow through on a lot of stuff. Next week, I think we have some upside. But there is that gap underneath us, and if we got down to that gap, I would make a stand there. So that's the setup for next week. Now I've been going over some stocks. We'll just take a fast look. Oh, you know what we're going to do right here on this video? We're going to actually look at the earnings going into next week. All right, so that's what I wanted to do with you. So I'm just going to go over here to my other screen, and we're going to be looking at the earnings. Some comments in the room wander. I have to read that a little closer. Let me go through the earnings here, and then we can analyze that. So these are just notable earnings. These are not all the earnings. There might be some that we're paying attention to that might not be listed, but this is a condensed list. I'll give you an idea. I'm not seeing anything. I went over a couple earnings days earlier today. Plow. They do plows, of course. Clack. I'm not seeing anything. Take-Two Interactive, TTWO, video games. That's Monday afternoon. Cars, I think, is Budget Rent-A-Car. Going out to Tuesday just to get a look. Chesapeake, Duke Energy, Plug Power, Pays, SeaWorld, WBT, thing. Afternoon, we're looking at not much. Nothing really outstanding until later in the week. But we'll look at these a little bit closer. CVS on Wednesday morning. Teva Pharmaceuticals. Lumber Liquidators on Wednesday morning. Jack in the Box, IAC, Interactive Corp, Barry Diller, and then usually the next day we have the Match.com. Oh, Match is the day before, actually, on Tuesday, Match.com. I haven't looked at that chart. I'll look at it in a second. You could look at it, so we see if I'm missing anything. Lyft is an interesting one. I Ubered to the airport, Ubered there and back. The Uber guy going down was great. The Uber guy coming back, I don't know. It was a little stinky. Cron, I'm thinking, where's the big ones? Oh, I thought there was a couple big ones like Roku's. Oh, Roku Wednesday afternoon. That's a pretty decent one to watch. Angie's List, Skyworks, Stamps.com, Lyft, IAC. They're getting pretty big here. And then Thursday morning, Cron, a couple of cannabis stocks, Prego, and then afternoon, Activision, CBS. That's about it. Uber's a pretty interesting one. Yelp. All right, well that's it. You got a good feel for that one right now. Next, second part of this video will be the HPS watch list. We'll go out to members, but we'll give you a couple to sink your teeth into. We started a position today in Kroger, which was a very clean setup from yesterday. And again, members helping members. This one was brought to my attention, so I looked at it in a review and I loved it. So right at the open, we got in and moved up right from there. So it looks good. This turned back up, very bullish. Everything about this was really nice. So I expect this to move up. We got shares and options on this. And it continued to look good as a bottom play right there. And then there is, like I said, keeping my eye on Boeing to strike. There was a pretty decent candle today. I'm afraid I don't want to miss the opportunity on this. So I think next week we start to see a higher high being put in here. I might get back into Boeing, but Boeing's getting down to that level. There is a lower trend line I put down here. That will end up on the HBS watch list, meaning you will be alerted if there's any drop in Boeing. That brings us down to a very good technical level. That's way below us. So that's a couple there right there. And then the NYT, still holding everything. And this actually showed great resilience today. It gapped down, put a big candle and holding the 20-period moving average. Very strong. This is one of the stronger stocks. And you might think to yourself, New York Times, isn't that a newspaper? Why would I buy a newspaper? But you know, just the way information is today, and media, and just there's something about the chart here. It's very strong, and this is something I like. So I'm holding the 5 calls on this, and that's looking very good. Closed highs, and there's about 7, 8, 1, 2, 3, 4, 5, 6, 7, 8 stocks more that we're going to discuss, and I'll tell you a couple other ones here. The AUPH, just keep an eye on this when we're getting to an area where we'll be interested in seeing when I really start to. Now I don't know if this is a fat finger trade at the end of the day on the 60-minute time frame, because I could see it on my chart. I don't know if that's not really a real trade. I don't know. So if it is, it's paint in the tape, what we call paint in the tape, volume 4 shares. That 4 shares? It's 4 shares, not even 400 shares. It's 4 shares someone put up there. So paint in the tape. So we have a nice candle here. But other than that, wait for the volume to come in. They have trials out there, lingering out there, being wrapped up. Announcements come at the end of the fourth quarter, apparently. But I think, we might see a move before that. So I've been eyeballing this a lot and slowly getting in more and more. I have some options going out to October. I have some options going out further. I have stock now in it. And then I'm looking for this to be another ARRY being bought out by Pfizer, but we'll see who puts us a lupus drug. Very excited about it, but it hasn't done anything yet. The Veru, again, story on Veru. It actually dropped today and then popped back up. Earnings are going to come out next week too. Their big deal with Get Roman. It looks, the chart is actually shaping up nicely. It's a nice pullback. I don't know. We'll see what happens. They have all these drugs in the pipeline. They turn into a colon cancer a drug company, health instead of a female condom company. But they're using the funds from their products to fund their research, and so they don't have to really raise too much money, which is good, because the last time they raised money, the stock got hammered from 180 all the way down to 140, and we chopped around there almost a good half a year before ramping up and really running. Now we have a decent pullback. We'll see what happens with these earnings. I think they're probably going to be a good catalyst here. Interesting. I'm excited for it. Looking at the pattern here, first time back from vacation. Let's see what happens early next week, because this is a pretty decent candle. The volume has been picking up a little, so keep an eye on that. AUPH, the Veru, the LIXD, one more cheapie, if you like those cheapies out there. The LIXD LIXT has been holding at 105 area. Remember, we got into this at 18 cents. You might be thinking, why aren't you selling this? I said, well, you know what? It's a lottery ticket, you know? I don't know. For some reason, this thing is holding. I'd like to sell it. Maybe I should. Maybe I should take a few thousand shares off of this. But, you know, normally it doesn't give me an opportunity. The spread is really big, you know. But it's been holding up above $1 in the bid. I think I could sneak out of this a little. Just kind of, you know, just lock it in. But it seems to be holding up pretty good. And that's something of interest to me, because, you know, there's definitely no sellers here. We keep on getting little pops. Oh, main chart. Oh, God, I messed up. Sorry. I messed up. There we are. When did I lose that? You know, I hate that when that happens. All right, so sorry, I didn't show you the other charts if you didn't see them. Here's the Veru, which I think is really nice. I mean, it basically doubled since its last low, and this is a pretty decent candle. And again, I think earnings are coming out soon, within the next 2 weeks. I would, hope that actually we get a positive reaction out of this, and maybe some updates on some of the trials. And then the other one before that was the AUPH, which I was looking at. And this is, pullback today. But again, they have the lupus drug in there, a little painting of the stock here. Remember that we just talked about how they bought 4 shares here. And now you have a big candle, and it looks all discombobulated here. But that's where we are right now, 639. The setup here on the daily, again, we need news on this, but it's been holding up pretty good, just waiting for some news to take off. I think this could easily get going. If any positive news out of this, I picture this a $10, $11 stock, close to a double from here. There is the possibility of some bad news coming from the trials, and that is what's keeping me stable on this and not aggressively adding to it. But I'm looking for a reason to add to it. So I'm going back to them. New York Times, I think we went over that one. That's about it. I think that was the only charts we messed up on. I'm sorry. But I'm going to, like I said, I want to go through all these other charts on the next portion of the video, which I'm going to do tonight, because now I don't have to run home and go to the thing, so we're going to take care of that. There's a Luckton. Which ones, did you hear anything that you needed to see, that you wanted to see and you just didn't see, and I might have not have put it up there, the Kroger. We're in the Kroger, the New York Times, NYT. I got looking really strong. Then we went over some other ones. I also like the Vive, which had a decent candle. Again, need some positive thing. And again, going into next week, I think we have a better shot to a pop. But if there is a drop, there's a little level underneath us that I'll be paying attention to. All right, so that's the end of part 1. And I'll go right into part 2 with you. For those on the site, and I'll put it off. And I'll turn this off. Remember, if you get this, DayTraderRadio.com, that's where you get all this information. Watch the shows live trading, and everything else. Get your asses in gear. I'll talk to you guys in a bit.